So today's class, we're going to talk about Elliott waves, right? Elliott waves are how we identify when the trend is continuing and when the trend is correcting itself. We spoke a lot about in the beginning about understanding what a trend was. We know that a trend and a channel are are the same thing. The only thing is that on a trend, we focus on, the support or the resistance. And in a channel, we're focusing on the resistance and support. For us, what we're going to learn about is the characteristics of each wave and what they signal, right? So we understood in the beginning that 2 touches to a trend is the start of a trend, right? And 3 touches confirm it. And when the market approaches the trend for the 4th time, usually that decides if the market is going to A, continue going up, or B, break the trend. We've learned about market structure, right? Understanding where the market shifts from one direction to the next, right? How that trend changes. What I want you guys to learn today is, for instance, we have this example of a wave to the upside, a trend to the upside and a trend to the downside. And you can see that every move to the upside or downside in that trend is one color, and that color represents a number. So in this case, we're going to talk about the impulse waves, right? So the impulse wave is when the market is actually trending upwards or downwards, what each move in that trend means, right? So I want you guys to write this down in the very beginning. When we're identifying the trend, right, we're also looking at, what point of the trend we're on. And when we're identifying that, we're looking to understand if the trend is reversing or continuing. So to start off, let's talk about the first move or the first wave in a trend, right? So the first wave is this green line right here, where the market starts off to the upside. What this indicates is this is the first move towards the upside. And we spoke about buyers and sellers, right? Within candles, understanding if if the buyers are in control or the sellers are in control. Hold on one second. Sorry about that. So when we identify if the buyer or seller is in control, right? We spoke about engulfing candles, right? We spoke about Morobuzos, long bodies, all of these different candles, right? For us, the important thing is to understand what the first wave is. The first wave is, again, that's the first move to the upside. So what happens is that this is when there's a few traders that they think that the market will go up and they start buying, causing the market to rise in price, right? And as we said, this is the initial move towards the direction of the trend. So what happens is when people start buying and the market reaches a specific point, let's say it's a resistance or a demand or a supply zone, right? And they believe that that's it, that's where the market's going to go, then people start to take profit. And then the market starts to fall, right? The price starts to fall. And that's where we see the second wave, the blue line here. So the first wave is the initial move. People start to think that the market's going to go up. So they start buying, price goes up. Second move is the correction, right? Or the retest of that break of a level or price or whatnot. And so in order for the market to continue going up, we need to see the market retest, right? So the second wave is when people start to take profit or the market is retesting the broken level or price. So then we have the third wave. The third wave is usually, and I want you guys to remember this, the third wave is usually the strongest push up because most people realize that the price retested that area and the market is confirming the direction, creating a higher high point, right? Remember when we were talking about in a channel, we have higher highs or higher lows? Well, the retest is a higher low, and the high where the first wave created is the higher high. So what happens is that's usually the strongest push because people realize, oh, shoot, we have a retested area. I'm going to enter for a buy, and now the price continues going up. So after the market created this high, the way we indicate where or if this is the strongest push is if the market on that push was a greater push to the upside than the first wave or that first initial move to the upside. So let's say that first initial move to the upside was 25 pips, and then the market came back down 15 pips to correct itself, and then the next move up was 30 pips, then that's a greater move. Now, the important thing is to understand what happens after, right? There was a broken level. The market broke past the previous higher high. Creating a new higher high, the market has to also create a new higher low. So when the market comes back down, again, this is when people begin to take profit, causing price to fall. Usually most people still hold on to the trade and they re-enter that trade on a buy, causing the next wave, which is the fifth wave, okay? So the fifth wave, I want you guys to write this down. If the third wave is not the extended move, it's always going to be either that third push to the upside, the third wave to the upside, or the fifth wave to the upside as the extended move, okay? So when I mean the extended move is that it's the strongest push to the upside. So if in the case where the market on the upside, you know, let's say wave 3 hit a zone, but it wasn't the zone we identified on the daily chart. And, you know, after the market retested that level again, creating the new higher low, right? And we were, let's say, 45 pips away. And, you know, we just started seeing more and more confirmations here. Let's say on the fourth wave, we saw a big old engulfing candle. And then the market just started going. And then now the fifth wave turned out to be a 45 pip move to the upside, and it actually is having trouble breaking that daily zone, right? That supply or resistance area. You know, that's where we start to understand that the difference between 1, 2, 3, 4, and 5 in that wave to the upside, that's where we start looking. So to translate this from what we've learned, right? Before that first move, right? After the market came back and retested that level for the second wave, those are the two touches to the trend, right? After that, the market made its third move and came back and confirmed that we were on an uptrend with the third touch. On the fifth wave, when the market reached its highest point, the market started to come down. If it broke the trend, that's where we apply market structure. Let me know if that makes sense to you guys. I'm gonna ask you guys individually. Evelio, make sense?
Mucho sense.
Perfect. Dean?
Yeah, that makes sense.
Perfect. Jeff?
Yeah, but you're not seeing like with this, you're never seeing like a fourth touch to that trend, right?
I mean, remember, if the market respects the trend on the fourth touch, then it may mean that the resistance of that channel is the important price the market's trying to come back up and maybe break it or not break it. So I'll show you guys an example of the uptrend on a chart and the fifth waves to the upside, all right? So see if I can find a good uptrend to show you guys. So here's an example. So we see here, right? The market was on a downtrend, right? And then the market broke below the zone and broke back above. It wasn't until the market retested the price here, right? This support area. This support area here where the market started making its first initial move to the upside. Okay, so let's look at this move here. So I'm going to use my Elliot wave tool on TradingView. So here's my first move to the upside, right? That's my first move. The market came back, retested, made another move to the upside, came back, retested, and made a last move here. So we see here the first move to the upside, the market came back down. The third wave was larger than the second wave, the first wave, I mean. So when the market came back and retested the area that it broke above, the pressure to the upside was greater, causing the fifth wave to actually be the extended move to the upside. What happened after that? The market started trending downwards, right? Market started trending downwards, and then they were unable to continue breaking below, causing the market to move to the upside once again. So here we go. We got 1, 2, 3, right? 4. The market actually came all the way down here before making a strong push to the upside here. You see here? So the actual wave to the downside for the retest was here, still respecting the fact that this is the trend here. So you see how the market faked out here, came back up and did it? I'm showing you this example here so you guys can see, as long as the market did not break the previous low of where the second wave was, we still can have that representing as the fourth wave to the upside. Let me know if that makes sense to you guys.
Yes.
Perfect. Mr. Daniels, how you feel?
Good.
Perfect. So this is an example on the uptrend, right? So we have this uptrend here, right? We have the market respecting this uptrend. We have, you know, the 5 waves to the upside. The market came back down, right? This move right here, this is the correction of that move to the upside. So what happens here is that a lot of people started taking profit, but when they noticed that the market was unable to break below the price of that third wave's high, and price never broke below, people saw that as a buying opportunity and took it even higher. Okay? So going back to the example, so we understand that, right? Moving forward, that the first wave is the initial move to the upside. The second wave is the correction. The third wave is the next move to the upside. The fourth wave is the correction, or the retest, as we say, right? And the fifth wave is the next move to the upside. The same thing goes for a downtrend, right? So when the market is trending downwards, first move is to the downside. Second wave creates the lower high. Third wave comes down, creates a lower low. Fourth wave creates a lower high. Fifth wave creates another lower low. Okay? Let me know if anybody has any questions in regards to that.
No, no questions.
Perfect. Jeff, how are you feeling with this?
I mean, I get it. It just goes against that trend rule that you were setting before.
Yes, remember, the important thing is, right, we understand the following. So I'm going to actually write that down for you guys. So we have 2 touches starting the trend, right? 3 touches confirming the trend, and the 4th touch deciding which direction we're going. One thing I always want you guys to remember is that as perfect as the market sets itself up, there's always going to be a time where that is still valid, but in the end, you know, not everything is picture perfect. Okay, let's look at an Elliott wave to the downside. So we have the market going up, reached this point, so it made its first move down. Here's the retest, second wave. Third wave was not greater than the first wave. So after the retest, the market made a large push to the downside. Notice what happened. When the market started consolidating, they couldn't break above the price of the lower high that this fourth wave made, right? So when the market broke back here, after the market retested here, look how the market made its move to the downside. See, we have the first wave, second wave, third wave, fourth wave, fifth wave. Then the market started to consolidate. I want to talk to you guys also about Elliott waves within a range, right? A consolidation. So let's say that the market is trending sideways. You will always see the opportunity where the market, when it starts to range, there will be an Elliott wave where that you can see that on a sideways, right? Because we understand that there's three different types of channels, right? We have a ascending channel, a descending channel, and we have a horizontal channel. So I want you guys to always remember, the important thing when using the Elliott wave is to understand where in the trend we're at. If the market has been trending upwards, let's actually use our whiteboard tool here. I'll check it out right now, dude. So let's say the market is trending upwards, and we have the uptrend here, and the market's been trending upwards. We have 1, 2, 3, 4, 5. Right? So 1, 2, 3, 4, 5. We have 1, 2, 3 touches to the trend, right? The rule that we spoke about, Jeff, just now about the fourth touch is, let's say that the market started correcting itself and it couldn't hold price above the zone and it broke back in, and let's say retested here, then now we probably have another Elliott wave in play. And if it is so, we now know how to decide if that's the case, right? Because now we can see if this trend is still valid, even though this trend to the upside had 5 waves here. Once the fake out came out here and the market retested back in, we have now the first wave, the second wave, the third wave, the fourth wave. Excuse me, I did this completely wrong. This is 1, this is 2, this is 3, this is 4, and that's 5. And now if the market does break the trend here, we use market structure to identify based off of what? When the market is trending upwards, and after the 3 touches, we identify the support of that. And once the market breaks below that and the trend, when the market retests that support, which is now a resistance, we now have the start of a trend to the downside because we have the 2 touches. Okay? Type 1 if you guys all understand. Evelio, any questions?
Nope. We're good.
Perfect.
No, that makes a lot more sense. Thanks, bud.
You got it. Dean, how you feeling?
If we could do it a couple of more times, like you say, maybe put one of those to try it, that would be really nice.
Yeah, I'm actually gonna do some examples for you guys on the chart, and then you guys are gonna do it. So here's a larger move to the downside, right? So we have the first wave to the downside, we have the correction, we have the third wave, the correction, and then the 5th wave. You guys see that? Right? First move to the downside after consolidation, or as we learned, accumulation, right? Or distribution. The market broke below, came back, retested this level. Let's see if these levels have any significance based off the past, right? So let's look left. So we can see here, based off these prices, right, that they represented a support down here, a resistance above here, right, another support here. So we can see moving forward, right, here's the first move, here's the second move as the retest, here's the third move, here's the fourth move as a retest, and on the 5th move, when the market reached its bottom, it started to retrace to the upside. You guys see how it came back up, retested the zone that we have drawn now here, came back, tried to create another low. Instead, it created a higher low based off the previous low, but it also respected the demand zone that the market created here. So once the market broke up, never retested on the top, what did it do? Came back, retested, and then created a new wave to the upside. So this is a primary example of where we would take market structure, identify the resistance of that market structure, and notice here that after the market broke above on the third wave, the market retested that zone and that price. You see this, let me make this thicker for you guys. See the red line? That's the resistance of the fourth wave, where the market retested that and then made its strongest move up, confirming that that downtrend is now over. After the accumulation of price, we saw the strong move to the upside, confirming that we have a change of trend. Make sense, guys? Evelio, how you feel?
Mucho sense.
Perfect. Dean?
I'm good. It's making more sense. I did have one question though about, does it matter how long the move is at all, or can it happen like within a few candles?
Depends on the time frame you're looking at, right? Because in the end, if you're looking at a smaller time frame, that trend is going to be different, and that actually leads into the next discussion that I have. Inside each wave of a trend, right? On one time frame, it looks like one move down, but let's say we focused on. I'm gonna focus on one of these downtrends right here, right? Look at these 4-hour candles on this downtrend here. If I go on, like, let's say the 15-minute chart and look at it here, inside these moves, there is potential on a smaller time frame that there is another Elliott wave going on. All right, so in each wave, there can be a trend of its own inside that. That's why it depends on the time frame. That goes back to that rule we spoke about when identifying a breakout or a fake out, right? When the market breaks out of a time frame, you want to see a retest on that time frame as well. Okay, so here's the example. On the first move to the downside, we can see that inside this first wave down, we had one wave, the retest, the next wave, the retest, and then the last wave. Even if we supplemented to that. So that was one wave right here, right? Here's the first wave, second wave, third wave, fourth wave, fifth wave. So on that one move on a lower time frame, there's actually another Elliott wave we can see on the smaller time frame. So I don't know if that answers your question, Dean, but the important thing I want you to focus on is to understand the following, right? We're using the Elliott wave to understand where in the trend we're at. So if I'm looking at a trend on the 4-hour chart, right, and price is breaking and retesting on that time frame, on a lower time frame, I may also see the opportunity to take that trade, let's say on a smaller scale. On a higher time frame, we're taking that trade on a higher scale. All right. Evelio, I know you once asked me a question about that, but does that make sense to you as well?
Yes. Mm-hmm.
Perfect. Because remember, the goal here is we're looking for optimal areas to execute a trade. So as we're learning about how to read the charts and what's causing price to move up and down, is it the buyers? Is it the sellers? Is it because of a news event? Is it because Donald Trump wants to be Donald Trump? All of that. In the end, when we're looking at that, I want you guys to focus on understanding what's happening, because it ties into the 3 questions we always ask ourselves: what happened in the past, what's happening now, and what happens after. Okay? So if what happened in the past is that the market made its first move to the downside, if what happened in the past is the market making its first move to the downside, then I now know, guess what? Here's my first move to the downside. Here's the retest. Then I know what's next. It matters because here's a bearish engulfing candle on that retest. Boom, is my third wave. Here's the next retest. Here's my next bearish engulfing candle. Boom, there's my next wave. You see here? In the end, on every breakout or fake out, the important way to identify where to enter and observe that Elliott wave is on the retest. All right, so here's my move to the downside, right? The market retested here. If I use my zones to identify that, here's my move to the downside. I'm not gonna count this here. I'm gonna start from the retest. Here's my first wave, second, third, fourth, see fifth, and then the market couldn't break that level. Now we're going up. Market went up, right? Here's my first move, second move, third move, fourth move, fifth move. When the market created that ascending channel or that rising wedge, right? After dropping, then the market went down. Guess what? Here's my retest, my first move. Here's my second move. Here's my third move. Here's my fourth. And here's my fifth. You guys see that? Let me know if that makes sense.
Loud and clear.
Perfect. Jeff, how you feeling?
Oh, it looks good. I like it.
Perfect. Mr. Daniels.
Hi, we're with you, JL.
Perfect, perfect. Dean, making sense, Dean?
Yeah, that makes sense to me.
Perfect. So let's go ahead and open up the chats real quick so that I see what you guys are. Actually, before, let's talk about, let me delete some of this. Before I forget about talking about this, after we identify those 5 waves, right? You have what's called the correction waves. All right, so the correction waves come in on A, B, or C, or if it's in a wedge, you have A, B, C, D, E, or if it's a consolidation, you'll have A, B, and C, and then the next move up. So we understand that after the wave sets itself up to the upside or to the downside, what happens is after that, right? After the 5th wave. So we saw some examples where, for instance, here was our here's our moves to the downside. 1, 2, 3, 4, 5, right? Now we have the next one, which is the correction. So if we use the correction, we have A, B, and C. See here how C reached its highest point. The market came back to retest the last low. And I'm sorry, I pushed this up way too high. The market retested the last lowest high of the previous downtrend, creating the new trend to the upside where we have 1, 2, 3, 4, 5. And then we have now the correction waves, right? So we have A, B, C, D, E. See here how the market couldn't hold up on E to continue going up. So the market came back, retested, and now we have a new wave to the downside. So with the correction wave, it all depends. If this is a triangle, right? Is this a triangle or a wedge, right? See how we have higher lows and higher highs? We have the 5 points of that confirmation. So we have A, B, C, D, E. On a setup like this where the price consolidates, right? See here? Where price consolidates, we see that we have A, B, C. You can even do A, B, C, and then notice how the market started making its move down. Even in this move right here, we have 1, 2, 3, 4, 5. once the market couldn't break the low of that previous trend, the market set itself up for the push to the upside. Let me know if I confused anybody or if everyone understands. Evelio?
Well, it's just to see it a lot of times, and then we'll you know, it's not that it's difficult. It's just that we got to do it to get used to it and get accustomed to find the exactly.
Perfect, perfect. That's exactly what I want you guys focusing on, because in the end, what we're looking for here is, remember, the 3 pillars, right? Understanding, identifying, and applying. So, let me see real quick. Dean, before I open up so that you guys can do it, you have any questions?
Nope, I'm good.
Perfect. Jeff?
No, I'm feeling the same way as Avelio. You know, I just gotta see it a little bit more.
Yeah, for sure. For sure.
Hey, Jose, can you go over the ABC part? I'm sorry, it's just that I've been having bad reception.
You're good, man. So after, if it's an uptrend or a downtrend, and let me go on the whiteboard real quick. If it's an uptrend or a downtrend, right? So let's start off with the uptrend. So we have the market creating 1, 2, 3, 4, 5, right? So we have 1, 2, 3, 4, 5. So we have that trend going up. What happens is that after that, we start to see the correction after that move to the upside, right? So we have A, B, C, and if the market can't break that trend, then we'll see the market come back up, right? So A, B, C. A is the first move to correct, B is the retest, C is the next move, right? The important thing is to understand what? If the market is trending upwards, and then we have those moves here, 1, 2, 3, 4. Why do I keep doing that? My apologies, guys. 1, 2, 3, 4, 5, and the market starts to correct itself. If C creates a lower low than A, okay, then what happens is we now have to keep in mind of the structure. So how we identify that, right? Here's the last touch. If C created a low here, right, and the market came back and broke the zone, then we have to pay attention to the retest of that last touch. Right?
Marcus.
Exactly. Does that make sense?
Yes.
If it's a triangle where the market is creating after that push to the upside, right, and the market is creating a triangle or a wedge, right, where it's creating higher lows and higher highs, then we're using the A, B, C, D, E. And if A, C, and E are creating a lower low, or we know that it's creating a higher low, but if E creates a lower low than A and C, then we now know that we have that rising wedge pattern in play, which signals a reversal. Okay? And then the next one is the important topic of when price goes up, right? Creates the waves 1, 2, 3, 4, 5, and then starts to consolidate. Then that's where we use A, B, and C. A being the first move to the downside, B creating the high, C creating a lower low, right? And once the market can't go up and it breaks that zone, then now we know that at the end, either way, after distribution, once the market breaks and retests here, we now understand that we have a change of structure. In this case, whenever we do A, B, and C on a higher time frames, you're just gonna notice that after that move to the upside, this was the last wave of that trend is the first shoulder. That consolidation area or that B of the correction is the head, right? And the last shoulder is the retest of the last point of the trend, giving us that head and shoulders pattern.
Oh, okay.
All right?
Which signals that the market is going down.
Correct. So
Thank you.
let's see you do it, Evelio. Share your screen.
Why me? Why me? What time frame you recommend? Do I have to make the support and all of that, or just the uptrend? Hello?
Yeah, I would suggest, sorry, I by mistake muted myself. I would suggest you always share, identify your zones. So zoom out of the chat. I mean the chart.
Like this?
One more. Perfect. So draw your zone. So I'll help you out with one. Right. So we have a zone here, and we have another zone here. So we can see, I'm going to help you out in this one so you can see what I want you to identify. So we can see that after the fake out here to the downside, the market broke back up and retested. So now we have our first move to the upside. Then we have the correction, then the next move to the upside, then we have the correction, and then we have the last move to the upside. You see how that can be one move, or we can just focus on this move here. And then we have, I'm going to use a different color.
Another one.
A, B, C, right? The C never created, after it created a lower low, price never maintained itself below that. So if we focus on identifying that zone there, you see how then the market made its next move to the upside?
Yes.
So go ahead. Move left and identify another one.
I'm going to do it from the top then. Should I make a smaller time frame?
No, just do it with what you got there. I would suggest bring it a tad bit lower so that that wick right there is also respecting the zone. Yep.
I was trying to do.
So you see here, where would you start your Elliott wave? So you see all this?
After the retest.
Correct. So go ahead. She's downstairs, baby. Go. Downstairs, baby.
It's going down, right? So
the first move is that after the retest.
Can I go down?
Does it validate it? There we go. Attaboy. Good job. And then you see how here the market did A, B, C, and then started going up. And then what it started doing, this is all a range here. It was not creating any higher highs or higher lows. Within these trends, it was. Within the trends here,
Yeah.
channels they were, but overall the structure remained the same.
Yeah.
All right.
Yes.
Look for another one. Give me 1 second. Raul is calling me. Give me 1 second.
Anybody concur with me?
It looks good, man. Looks good. Do you see that? Do you also see how in that same move, on the first move, we had 1, 2, 3, 4, 5?
Yeah, exactly.
That's an example I wanted to show you that within one wave, there can also be another Elliott wave in there.
Yes. And another channel.
Exactly. You want to do one more?
No, I'm good.
Perfect. Here's another one for you, right? So here's the retest. Is the first move, second, third, fourth, fifth. You see why I want you identifying your zones?
Yes.
Remember the rule when I told you identifying your zones? You identify the top, the bottom, and the middle. And you can see how the Elliott wave plays in that. Pero sigue practicándolo. Let's give someone else an opportunity. Good job, though. How's that feel, you doing it yourself? You feel like now you're understanding. We understand that overall, this is an uptrend. But now we know what part of the uptrend we're in.
Exactly.
All right.
Thank you.
Good job, man.
Thank you.
Hey, Jeff, why don't you go share your screen?
Okay.
So always identify your zones so it helps you indicate that.
Right. Right, hold on.
The brush.
All right, there you go. All right, so I thought that was a pretty good example, like right here in the beginning, right? 1, 2, 3, 4, 5, right?
Correct. And you can also see that within there, there's also another one.
Mm-hmm.
Even if we would have started from the retest here, right? 1, 2, 3, 4, 5.
Mm-hmm.
So either way, it's good. It's good. You see here, the consolidation of candles after that long wick, right? Either way, this was a big old hammer. But before price indicated it was going up, there was a lot of traffic here. Then it made its move to the upside, came back down, right? This move right here, it's a nice trap. That's the trap. People thinking, oh, this shit is going to come back down to fill the rest of this wick before coming up. But no, what they did, they actually took the price back up where the market never retested here. Notice why they brought price here multiple times. Well, look before. See how the market retested this here?
Yep.
And then there was a strong bearish candle. Remember when we were talking about the different types of touches? If it happens on one end one way, on the other side, it's going to happen the same way. So here's the one end. It happened here twice. What did the market do? Replicated that exact same thing. 2 touches on the top.
Yeah, it's like perfect.
And then drop.
Mm-hmm.
That's exactly how the market moves, man.
Mm.
And then good job on the correction. See, A, B, C, market couldn't break the high.
Right.
We're dropping. Right? We have the first move, second, third, fourth, fifth.
Yeah. Yeah, it definitely helps. Definitely helps that we know that's like the head and shoulders kind of pattern there.
Exactly.
That's what you're looking for with the correction.
Here,
yeah.
You see? Right? Here's the inverted shoulders. You see how they were unable to break price here?
Yep.
So what the market do?
Move to the downtrend.
Exactly. Another thing. Here's the support of the last touch of the trend. Where did the market retest? Before actually making its move to the downside? You guys see that?
Yeah.
So I want you guys continuing working on that. And we're going to we're progressing, Jeff. We're progressing.
Feeling it.
How do you feel, though? I would love to know how you feel. Like, from day one to now, like, it's crazy how at first you're looking at this and you're like, all right, what does this mean?
Right.
And now, just kind of understanding what the chart is, like, what are you feeling?
I think it's really, I guess, fascinating is the word. Like, once you kind of finally like identify everything, and then you kind of take that, and then you kind of piece it together and try to figure out what it means.
Mm-hmm.
And then now you're kind of looking ahead, like, all right, now you have all this information. What are you gonna do with it? Kind of.
And that's where we start plugging everything in.
All right, it's real interesting.
Another thing I want to add is what I told Elliot. Remember, in the end, I want you identifying that median zone as well because it helps. I mean, let's say we would have identified the median zone based off price over here, right? We would have been able to at least understand that on the third touch of that trend we identified, right? Let's say it was this one. On the third touch, right? We saw that after the market broke it, and she finally came back and retested it over here, we would have been able to identify that change of structure. See how the market faked out here and broke back in, never retested the zone. And when it finally broke and then retested, then that's when the move to the downside occurred. We have that. Now we have the 5 waves. 1, 2, 3, 4, 5. Market came back up, couldn't break the zone, right? What happens? Strong push to the downside. All right, but great job on this. I want you to keep practicing it. Let's see Dean. Dean, share your screen, buddy.
Okay, 1 second.
Give me 1 second.
Jen, I'm gonna just give a quick chime in here before Dean does his thing. So just from past experience with the Elliott waves and then the corrective waves. So seeing how it's done with the charts right there. I remember from the past, just doing it without seeing the candlesticks is a problem for me. So I could see it once I have like a chart that's already done up. But when you have to do it without seeing the candlesticks.
That's why I want you practicing it with the zones, okay? Identify your zones, and then on the retest of a fake level or a break level, then look for the identification of it. Because once you have your zones drawn out, right, all you have to do is, as the trend is playing itself out, you understand if this market is going down, there's going to be 5 waves of it going down, right? So while Dean's screen is loading, give me 1 second. What happened there, Dean?
It's just taking a long time. So last time I stopped the share and started it again, it worked faster. So I was just trying that.
All right, real quick. So if, let's say, the market went up and then started consolidating, and if the market makes a first move down, right, we know that we need to see a retest of any of these levels, right? So let's say this is the retest and the market makes another move down. We know that moving forward, if we didn't count this as the first wave and this is, then there's going to be 4 more waves down. So if I'm looking for that on that time frame, you understand that based off of what happened in the past, I can see the levels of where the price can start to come down, right? And where I need to keep an eye out for the retest, the break, and then the retest. Does that make sense? So I want you, when you get home, practice it and send it to me, right?
Okay. Okay. Because I see that it really, really does boil down to really having those zones in there as well.
Oh, they're very important. You have to know, no matter what, you always want to know where your supply and demand zones are, because that's where buyers and sellers are paying attention to.
Right.
All right?
Okay.
Keep working, girl. We're going to get there.
Mm-hmm.
Let's see. Dean, it loaded?
Yeah, I jumped on my other computer quick.
That's what I need to have. Multiple computers so that this don't happen.
So this is the one I sent you in Discord.
Yeah, that's a good one. We probably have another move to the upside. Remember, tying into, huh?
Is this what?
No.
No.
No. We probably have another move to the upside because look, you see this here? So this would be the first move. This would be the second. This would be the third. If this is the fourth, that's the fourth, then we know there's one more. And an area we can pay attention to, is it this one? Is it, or this?
Yeah, those are the 2 areas I was thinking of also.
Mm-hmm. And remember,
So
you're on a smaller time frame too. So let's look at, let's say, the 1 hour chart. So this move to the upside can be halted if the price can't break above that price. You see?
uh-huh.
So if that is the case, and the market starts to consolidate, and then it makes it move down. And on that same time frame on the 15-minute chart, if it does make it, you now know that there's 5 waves to the downside. And the important thing to pay attention to is what happened in the past. So let's look left real quick. What do you see there? In the previous trend. See how price consolidated right here?
Oh yeah.
And then it retested here. So 1, 2, 3. Is this 4 and then another move down? Or
Yeah.
are we counting this as the first move, that the second, third, fourth, fifth, and now we're seeing A, B, C, and then maybe a continuation to the upside?
I'm not sure on that one.
No, I'm not asking you. I'm just saying these are the
okay.
possibilities. You get what I mean?
Yeah.
So here's another one, right? One, 2, 3, 4, 5. See how we had A, B, C, D, E, right? The triangle. Market shot up. Here's another one. 1, 2, 3, 4, 5. You see? Market came back down. Couldn't break the previous low. The market attempted one more time. Couldn't break the previous high. Then started making its move down. That's why I want you identifying your zones. All right?
Okay.
How you feel? Does it make sense or you still feel lost?
That makes sense. I think I just have to do a few more.
Perfect. So let's get to it. Do a few more and send them to me.
Okay.
Let's see. Jeffrey, you're not in your computer, right?
No, I'm not on my computer. I'm on my phone.
No problem. So just send me some of those examples. Send them to me in the chat as your homework, and then I'll review it with you tomorrow.
Okay, perfect. Got it. The only thing that I'm a little confused is with the ABC I get, but the continuation of that with the DE. I don't know.
So the
correction.
C, D, E. Remember, A, B, C, D, and E. Whenever we use those corrections, is when the market is
The triangle.
a triangle.
Okay.
Is it an ascending triangle, a descending triangle? Is it a symmetrical triangle, right? Is it a wedge? Those are when you use those 5 points because it's 1, 2, 3, 4, 5, right? A, B, C, D, E, right? If E is unable to break above and continue going, creating a new Elliott wave, then we now know that the move may be to the downside.
Okay.
All right?
Got it.
Perfect. Does anybody have any questions before I let him go?
So if it's a channel, it will be an ABC.
A wedge or a triangle. On a channel, that's a good question too. On a channel, remember, a trend, we're focusing on 1, 2, 1, 2, 3, 4, 5, right? So if this is the channel, and excuse the crooked line, but if this is the channel, 1, 3, and 5 should be your higher highs. And 2 and 4 should be your higher lows. And 0 is a higher low as well. Okay? And then if we have A, B, C, and then the market does not make an extended move to the downside to break the trend, then we now know that we have a possibility of a continuation. And I like to offer that into consideration. If I'm looking at a trend and after the fifth wave she just kept going up, then that means that what we were looking for on this time frame is actually occurring on a bigger scale on a higher time frame. So let's say this is on the 1 hour chart, and this is the scale we're looking at, right? This being 1, 2, 3, 4, and 5. This may actually be one wave on a higher time frame.
Got it.
All right. I hope everybody has a great evening, and I'll see you guys tomorrow, same time.
See you
Yep,
tomorrow.
have a
Good
blessed
night.
one.
You as well.
Good night, everyone.
Night,
Thank
everybody.
you. Good night.
Good night, guys. Bye-bye.